A very good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of automated trading, we will be continuing our work with linear regression intercept and the Williams R. This is the second part of the ongoing series for which we starting working yesterday. So this is a fairly simple setup as we have laid the foundation for our setup in yesterday's session, and now we will be building on it. The indicators technical description ATR is going to be used as well. Before we get started, this is a standard disclaimer. Here I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive testing for many months and maybe even years and allow it to run on the demo account for sufficient enough time to get a good enough idea of its functionality. And of course, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. On that note, we get started for the day. So what we are going to do in today's session is we will be defining the calculations for the buy point and the sell point, the entry points, and then we will also have to determine the stop loss and target, for which we will be using this ATR, and using the ATR on the hourly time frame we will be defining the stop loss and the target points. And as I had explained to you, the buy entry and the sell entry is fairly simple. I would again give you a brief summary. In our today's session, we will basically try to build on the buy side. So I think while starting to build the buy side, I will explain to you the logic. And here what we have done so far, we have done the instrument subscription for the Euro USD. Position amount has been defined at 0. The linear regression intercept blocks with the look back period of 1 and 3. Historical candle data again on the hourly time frame, shift of 1 and 3, and it will be used in conjunction with the linear regression intercept data. Then comes the Williams R into the picture, and we want the trend to be strong enough to get initially during the overbought or oversold situation. And actually we are playing on the same side of the movement, so if it is entering into a overbought scenario, then we are actually looking to buy it. And when the underlying instrument is entering into a oversold scenario, and these are just initial R, then we are actually looking to sell it. And then, as I said, the entry point and exit points are going to be dependent on the hourly ATR for last 14 hours. Then to minimize, or you can say to become precise about our exact entry point, and to do that we have brought in the historical candle data. So that's it. Till yesterday we had defined the buy entry BE, and for that we had subtracted the hourly ATR from the last hour's candle close, and that was going to be our buy point. And now let us define the sell point, and for that the sale is going to happen as and when the underlying instrument drops below the linear regression intercept, while at the same time the magnitude should be good enough. And for that we are looking at the Williams R value as well, and the Williams R value should be falling in this oversold situation, oversold territory, and that means it will be below minus 80, only then the sell trade will happen. So we will be looking at the pardon me. So we will be looking at the Williams R data as well, and here as you can see, this time around we are seeing that Williams R has gone in overbought situation. It is now above minus 20, and at the same time the candle is also crossing over from the lower side to the upper side of this linear regression intercept. Provided rest of the conditions are in place, the buy trade will happen in such scenarios. So that is what the logic is for our setup. And now we have to define the sale point, and for the sale point we are not going in for the trade right away when the underlying situation comes in fulfilled mode, but we will be placing a order which will be equivalent to the hourly ATR range, and we will add that much points, that many pips equivalent to the hourly ATR to the last hour's candle close, and we will be placing a pending open which will be valid for 3 hours. So we are going in for a pending open this time around, and for last couple of sessions we were working with the market open, but in today's session we will be working with the pending open. So let us define the entry point SC, and for that we are going to need the components on the mathematical front, the calculation expression. Then again we will need to do calculations for three more calculations, one for stop loss, one for target price, and one will be for the order validity. And here we have to add the line 25 to the candle 21's closing level, and candle 21 is our last hour's candle close, and to that we add the hourly ATR. So here we have to find candle 21's closing level, and here it comes. To that we will add line 25, which is the ATR, as you can see, hourly ATR, and we add it. Okay, and with that what we have to do is simple, A1 plus A2, and we are done. We got the SE, which is sale entry. Okay, fair enough. And now we get three more calculation expression. I think we can do it later on as well. We will simply put in the blocks here, and we will do the calculations when we are done with the buy side. First we will add the if conditions on the buy side, and then we will define this. So let us first define the if condition, and then we will do the calculations required to fill in the values in the designated places. Okay, so here these blocks will stand empty for some time. We connect the flow regardless, so let us do that. And suppose if need arises, we can do further additions in the setup as well. And what we do now is we take in the multiple action block, and that is, here it is, and we leave good enough space to add blocks in case need arises. So here we are, okay, we are leaving some space as the session or not session, as the setup is still developing. We will need to act as per the need. Now we get in the if candles, the if block, and here we work with the if block, and the first condition is that last hour's candle close, that is let us take two if blocks. Last hour's candle close should be so here we got this, and now what we have to do is and candle 21 is last hour candle, okay, shift 1. So we need it to have closed above the linear regression intercept, which is line 19, last hour's linear regression intercept, and here is the candle 21's closing level, and it should be above. That means first input is greater than second input. Now we have to compare the closing of the candle 3 hours back to the linear regression intercept value 3 hours back, and here that is line 20, shift is 3, look back period is 3, and then what we have to do now is and we get candle 22. We will need to compare candle to 22's closing level, candle close, and this should be less first input less than second input, which means earlier the price action was in the lower side of the LRI linear regression intercept, and then during the last hour the price jumped up, and then comes the question of the magnitude of the jump, and to make sure the momentum is strong we will check on the WillR value, and here first input less than second input. Now we have to do the comparison. So here I would explain to you on the chart as well what we are trying to do. We want, as let us assume that this candle is going to close. We have still 7 minutes left to its closing, and let us assume it is going to close above this linear regression intercept. So we have checked on that the prior 3 hours back the candle close is below linear regression intercept. Then the next thing we have to consider is this WillR value. As of now the WillR is above -20, and that is the requirement, and we will now look at this WillR value, and we will put in the condition that it should be above -20, whereas we will also check on the prior hours WillR value, and it should have been below -20, and for that hour here in this case it was -50, so it will do the job. That means that these are actually the first few hours of the rise, and that means the momentum is just picking up, and this is the time to get involved with the side of the momentum, and that's why we are bringing in these conditions. So now we look at the WillR values. Here we got this William 23, Williams are 23, and it should be above minus 20, and then we have to consider the value with look back period of 2, shift 2, and that is Williams are 24. It should have been less than minus 20. First input greater than second input, and then this again minus 20, and it should have been less. So we take in one more if condition and join the dots. So here Williams are 24, first input less than second input. Okay, so we have defined the Williams R condition as well as the linear regression intercept conditions requirements, and now we will need to add some other requirements to finish the buy side setup. So we arrange these blocks where they belong, and they belong just below the multiple action. So here it comes. First input So we have defined these conditions here, and now we have to take into account the exact entry point, and that will be as and when the price action starts to climb above the last hour's candle close, and for that we are going to consider these 1 minute candle, these historical candles on 1 minute time frame. So we bring this and we will have to compare the candle 27's and candle 28's closing level to the candle 21's closing level, which means we have to take two blocks here, and then we will be pretty much done on the buy side. So here we have to, candle 21 is last hour's candle close as we have seen earlier as well. So here it is, this is the candle 21 and this is the shift 1. That means it was the last hour's candle close, and we have to consider its closing level. So here it comes, this is the closing level, and then we have to consider 1 minute candle close is candle 27 and 28, shift 1 and shift 2, and candle 27's close should be above the candle 21's close, whereas the candle 28's close should be below the candle 21. So that is what we have to make sure. And candle 28 closing level should be, so here it is, candle 28 closing level, and it should have been below the candle 21's close. Means earlier the price action was below last hour's candle close, and then whenever it starts to rise, a new order will be placed, and for that we want the candle 27 to have closed above. So here is the candle 27 close, and it should have closed above the last hour's candle, hourly candle here, there, and that is good enough. So now what we need is to bring in the pending open order, but as we are running short on time, we will not fill in the values. We simply define the buy trade here, and it is going to be a limit order, as we will be placing the order on the buy side below the current market price. That means it is going to be a limit order, and the first input should be greater than second input. So that's about it, and we line up these blocks where they belong, and then we will wrap up the session. We will need to define the stop loss, take profit, and the good till time, that is the order LDT. In our tomorrow session, we have already defined the entry price, and we will use that. So we will build on this setup in a tomorrow session, and that's it for the day. So thank you all for joining in. Have a fabulous day ahead. See you tomorrow. Goodbye.